Thank you everyone for joining us at our session today with RedPath. RedPath is working with LeaseCrunch to help you implement the new lease accounting standards. One thing I do want to note is that I know that you didn't ask for this change, even though we kind of all agree that committed future payments like that with operating leases should be represented on the balance sheet. And so that's why it's important to us that implementing the new lease standard be as easy as possible. Because, once you've gathered and reviewed your leases, getting to accurate journal entries, amortization schedules, those are all, the calculations should be least of your worries. So what we're going to do is I'm going to go over an agenda. I'm going to go high level overview of the standard and then do a demo. And then at the end, we can go ahead and answer any questions. I'm going to have you put your questions in the chat if you don't mind. Everyone's going to stay muted for now, and then we can check out those questions at the end of the call. When we do the demo, I am going to show you how to set up your account, add leases, and run a report. And then after that, I'm going to show you all how to get started. So our best next steps. All right, so before we dive into what ASC 842 is, let's talk about when it started. So as many of you probably know, the new lease standard has been delayed just a couple times. So the rule now is that the first fiscal year starting after December 15th, 2021. So in other words, anyone with the January 1st fiscal year 2022 is your initial application year. What this accomplishes is that, so the goal of the FASB was to increase transparency and comparability among organizations by recognizing lease assets and lease liabilities on the balance sheets. What this does is it adds operating leases to the balance sheet in the form of ROU assets and lease liabilities alongside finance leases. And finance leases that were once called capital leases under 840. And if they're classified correctly, they're already on the balance sheet. So it's more of an in-depth overview of everything. I also want to kind of go over the downfalls of spreadsheets. So I know a lot of us are kind of like, why would I use a software? I can just use a spreadsheet. If we're just using a spreadsheet for a one-time thing and adding things in, that's one thing. But the fact is we are going to have to constantly be updating them throughout the year. And that can make things very error prone. It also makes auditing kind of a nightmare. I actually had a firm that had less than 10 leases and they decided they were going to do a spreadsheet. But because of all the changes and how more complex everything is, their auditing payments actually went up by like 25%. So if no matter what software you pick, it's definitely better to use a leasing software. It's going to be better for you, and it's going to be better for your team, your CPA team as well. I want to note also that this is what the new footnotes are going to look like. So originally it was just the maturity analysis, and you can see all of this other content that is in here now. So a lot more things that could mess up if we're just using a spreadsheet. Perfect. So now I am going to go in and give you all a demo. So when you first sign in, you're going to go to my lease page. To really quickly, so your firm is going to set you up. They're going to set you up. They're going to add your account, and they're going to add an admin. The admins at your company are going to be able to add the users by inviting them in, first name, last name, and then selecting the role read-only, a user, which can add leases, and then another administrator would be able to not only add leases, but be able to add users and also change things in this administration tab. So you can create users or user groups. There are some policies to go over as well that you would get to be able to select as an admin, setting up reporting entities, customization for your leases, such as asset types and cost centers, your GL accounts tied in with your reporting entities, and any type of currency that you're working with. So now I want to show you how to add a lease. There is a bulk import option I want you to make note of as well. If you have anything leases or less, it's going to be about just as quick to add leases one by one as it would be to bulk upload. But if we've got any more than that, we might want to look into doing that. So the thing we're going to do is select our reporting entity. I also want to point out that all these red asterisks on the side do mean that you must fill out this field. Everything else is optional. So my reporting entity already has USD tied in, giving it a name, say that it's a ABC lease, any description or manufacturer. I'm going to select my asset type because it's required. I'm going to say it's a building. I'm going to select I don't need to select the location or lessor, but I could. I am going to show you how to use this lease term wizard. It's up to your admin whether or not they're going to have you walk through this, but what this does is it guides you through a couple different questions to help you with classifying your lease term. So we're going to say that our lease started at the beginning of this year and that it's going to be a 5-year lease, so 60 months. And it's going to end on 9/30/2027. It's then going to ask me a couple questions. Are you reasonably certain you will bypass early termination? If you're unsure what something means, there are either going to be question marks or highlighted words that will take you over to our standard. This is in our help page. So we can go down to where it says reasonably certain. And there's a summary guidance that our experts have come in and kind of put it into plain English for us. If you also are wanting to read the standard and you're like, this is the best reading I've ever experienced in my life, who needs a novel, you can go down here and read the actual technical guidance from the lease, the actual leasing standard. So we're going to go back and say, I am certain to bypass early termination. I am not going to renew because I just want to keep those 5 years. So based on that, it's giving us the original end date and it's filling this in for us. And because you walk through those steps, you can be sure that everything is accurate. Then you can go and add any comments, custom fields, the lease admin, and the signer. And we have successfully added a lease. If you ever don't add anything and try and move forward, anything with the asterisk and you try to move forward, it's either going to highlight it and it's also often going to give you a pop-up box that says, you have to include this. So right now, the only thing that you need to include is the discount rate and classification. If you're unsure of your discount rate, you can hit that question mark and it's going to take you over to help. It's going to take you over to what the discount rate means, as well as a link to the US Treasury. You would then add your payment stream, your payment amount. So let's say that it's $5,000 for 60 months. If it's expected to increase, you could also add, if you split this up, first 30 months, it's going to be 5,000. The next 30 months, it's going to be 550. So it'll calculate all of that for you as well. And then that brings us down to classification. So because I did have that selected to go through the wizard, I'm going to show you how to do this. So it's going to walk you through all those questions again to be sure that we do select the correct classification. Will ownership transfer to the lessee at the end? No, I'm not going to own it. I'm not going to buy it. No alternative use. It's a building. Am I going to be paying for, will it be, the lease term be more than 75% of the economic life? Well, it's a building. So how long does a building last? Let's say that it's just going to last 50 years. That still gives us only 10%. And is our payment going to exceed 90%? We can calculate that. So since we answered no to all of that, calculate that it's an operating lease. If we had selected any of those to be yes, it would be a finance lease. And now you can be sure that it is certainly an operating lease. Select next. Oops, excuse me. See, can't move forward without it. Okay. There we go. Obviously, I cannot type today. All right. And so now it's added. It takes us to our GL account. It has all of the GL accounts tied in with the operating lease. Do want to show you that we can add centers. So if I want the office marketing to be in here, but marketing is like 33% of the cost, it's going to do that math for me. Going over to our variable expense and non-lease payments, you would select, you're already in your GL account, you're going to go down here, and anything that's a non-lease payment, such as common area maintenance, you can add that in, not required. And then any type of documents that you would like to be tied into this lease, you can add those here and upload them so they'll always be connected. Finish. It's going to take you back to that initial My Lease page, and we can see it right here in our leases. It's going to show you which reporting entity name, and it is going to be marked as complete. If I had left it without finishing it, it would be marked as incomplete. And if I made it set up so that one of my staff had to review it, it would be marked as in review. So now I'm going to show you how to run these reports. We can select several reports, several leases if we want. Let's just select these two. We're going to go up here and select our date, GL start date and GL end. So I'm going to say I just want to run it for a year. Let's go in and pull up those journal entries. And it's right, excuse me. My second screen gives me a hard time sometimes. So it's right over here. So here's our journal entry for those two leases for a year. Something to note at the bottom is we do always have these three tabs. So the data, all of the data that we've asked for, the criteria, and then the leases that we've run. Our amortization schedule. It's going to show you all of this content, all of this data. Again, criteria and lease. Then let's go down to that footnote that we're all excited about. Show us what that looks like. Here's our footnote for two leases for 1 year. See, we don't dislike spreadsheets. We just want to make sure that they're accurate. And then last but not least, we can just show you that all lease data. So for those two that we've selected, we can pull them together and you can just see all the criteria. All right, so that brings us to those next steps. We're going to start by, they are going to send out, your firm is going to send out this whole deck. So you'll be able to click on these. You'll be able to email your contact. We do have on-demand training videos as well that'll go over exactly what I just did, step by step, how to add a lease, how to run reports, how to add users. Once you're comfortable, you're going to add your users and your leases, just like we just walked through. And then any additional support you might need, you can, of course, reach out to your firm for help, but any type of technical support, you can come in here and submit a ticket. You'll get an email that says they'll reach out within 24 hours. I've never had it take 24 hours. So you should get an answer pretty quickly. So that is everything. And I guess we're ready for those questions now.
Yep, looks like we have a few questions, Abby, if you check
All right.
the chat. I don't know if you see those.
I do. If you have an abatement for some months of terms, are you able to enter those payments as zero? Yes, so you would want to go in and mark those in at zero. So the question was, if you have an abatement for some months of the term, are you able to enter those payments as zero? The answer is yes. You could just go in and write in zero for however many months payment. Is it easy to use the help option to determine the discount rate on a building lease? So that's a really good question. Discount rates, I believe they're going to be whatever it was. So if they're an older lease, it's going to be whatever they were when they started. I think that going into help and going into that US Treasury link is going to be the best way to help you determine the discount rate. Accounting for CAM charges is going to be that non-lease payment part of adding a lease. So someone asked, how do you account for CAM charges? So that again would be under the variable expenses and non-lease payments. Were there any other questions for me?
I don't see any. And Abby, how should attendees, should they be reaching out to their RedPath client manager or representative to?
Yes, so they should reach out. I have that. So one thing I do recommend is that RedPath, we send this deck out to your clients. And if you want to edit and add your email in there, I'm sure they already have your email. I'm sure they have a relationship with you already. But with that last page moving forward, just letting them reach out to you and letting them know that when they are ready to get set up. And then your RedPath contact will set up your account and your account admin. And that's when you would start adding your users and leases.
Perfect. And if anyone doesn't get Jill's address there, they can go to our website and just
I hope that was the right address to add.
Yeah, we'll get they can reach us either by that or the contact us form on our website.
Someone's
Looks like there's
asking
one more
the cost.
question.
Yes. So that's a question I expected, and I actually don't deal with pricing at all. That is a question for RedPath to answer with you all, if and when they have time for that conversation. But I truly don't. That's not me just trying to avoid the question. I truly don't deal with pricing whatsoever. You would go through your firm, and they would set you up with their pricing.
Abby, I can jump in on that. This is Andrew Schultz with RedPath.
Perfect.
So the LeaseCrunch software fee is a per lease per year fee that I believe is $66 or $78 a lease, something in that range. So we get billed directly from LeaseCrunch for the number of active leases that you have set up in the system. And we turn around and pass that cost onto you at no markup. We can and have done this for some clients where we help put leases into the system or assist with some of the implementation. And if you do ask us to help with that, we would just, that would be at hourly rates. So that's the high level, quick version of the pricing structure and how it works. I believe once you get leases input into the system, they become live, and that's when the billing cycle starts.
I think there are a couple more questions, Abby and Andrew, in the chat.
Do you need to account for sublease payments? That is a good question. I think there is a place in there that you can add lessee and lessors. So does that answer your question, I hope? And are there certain leases that are immaterial if they're under? I don't know the answer to if leases are immaterial based on how much you're paying for them. I was under the impression that all leases need to be accounted for under the new standard, but perhaps the accountants on the call could interject if they have a better answer to that.
That would be a question to work with your auditor or partner that you work with, just to see. The answer is going to be different for everybody. The right answer is no leases are excluded based on dollar amount. But for financial statements, there's always a materiality factor that the cost may not outweigh the benefit. Yeah, we get a lot of questions on the postage meters or copiers, things like that. Again, it's really based on the size of your company and how material that $700 lease is to your financial statements. Likely it's not, but I can't say that it isn't.
Any other questions? If not, well, thank you, Abby. Thank you, Andrew.
Yeah, this
Again,
was great. I appreciate all the questions and participation. So I hope it helped.
yeah, and again, if you have any questions, you can reach out to that email address that Abby shared, or you can go to the RedPath website, redpathcpas.com, and fill out a contact us form, and I will get that to the appropriate person, or you can reach directly out to your client manager.